Shareholders can raise their glasses to AB InBev. The world's largest brewer has raised its annual dividend by 9%. The firm's investors have been hungry for returns after years of focus on debt reduction following an acquisition spree. But it wasn't all good news. The company hasn't announced a new share buyback, which some had been hoping for, and its fourth quarter sales in the US were worse than analysts had expected. Looking ahead, AB InBev has forecast that its 2024 core profits will grow in line with its medium-term outlook of 4 to 8%. FirstRand has got its new financial year off to a good start. For the 6 months to end December, the bank posted a 6% rise in interim earnings that was driven by good top-line growth, particularly net interest income. South Africa's largest lender by market value has declared a half-year dividend of R2. This is 6% more than the previous period's payout. Spur continues to be a family favorite. Despite the mounting pressure on disposable income, the restaurant group has appealed to diners. The group says this is because of its loyalty program, and its popularity has resulted in a 15% rise in half-year revenue. This contributed to a more than 16% jump in headline earnings per share. Given the performance, Spur has served up a 25% rise in its payout to shareholders with an interim dividend of 95 cents. Santam has upped its interim dividend. A payout of R9.05 has been declared. This is a 7% rise on the previous period's figure. That's as South Africa's largest general insurer posted a 27% profit jump. The group says this was achieved despite difficult operating conditions. Impala Platinum may close some loss-making mine shafts in South Africa. That's if metal prices deteriorate further and efforts to restructure some operations don't improve its margins. The decision on this could be made within the next 6 months. The announcement comes alongside the release of Implats' half-year results. Profits slumped 78% during the period, and the miner has taken the decision to scrap its interim dividend and postpone spending on various projects to save about R10 billion. Pepkor is selling the building company to members of the firm's management and private equity group, the Capital Works. The transaction carries a price tag of R1.2 billion, and the retailer says it will use the proceeds to reduce debt. The deal still needs the approval of competition authorities. PetroSA has a new CEO. Xolile Sizani has been appointed to head the state-owned oil company, which is looking to resume operations at its refinery in Mossel Bay. That post has been vacant since September 2022. Sizani previously worked as CEO of Servest, the facilities management and cleaning solutions company. He has also had several roles at chemicals and energy group Sasol and at gas supplier Afrox. Further afield, Apple says it's betting on AI. In a shareholder meeting, CEO Tim Cook said the group plans to disclose more about its plans to put generative artificial intelligence to use later this year. Here's more detail in this package report.
Apple has been under fire from investors for seeming to go slow on AI. Critics say the iPhone maker is lagging rivals like Microsoft and Google, which are using the tech in their products. Now Apple boss Tim Cook wants to challenge that idea. He said his firm was hard at work on the tech and investing significantly. He says it will unlock transformative opportunities for users. Cook also said Apple laptops powered by its in-house chips were better suited to AI than any rival. But he wasn't ready to give many more details. Cook said Apple would disclose its plans later this year. The shareholders rejected a measure put forward by unions requiring the company to reveal how it uses AI. Apple had rejected the proposal, saying that would tip its hand on strategy. A similar motion will be heard at Walt Disney's annual meeting in April.
Now, a recent study has shown how airlines have drastically cut the number of destinations, and this has had tremendous consequences for companies in certain areas like Germany. Let's cross over to our reporter, Ndawling Lachela, who's standing by with more.
That's right, Zinati. Flying regionally has a bad rep in Germany, with many travelers at least trying to opt for more climate-friendlier train travel wherever possible. We're now joined by DW correspondent Lars Halter with further insights. Lars, thanks so much for joining us today. Now, what's behind the decline we've been seeing in the German airline industry?
Yeah, thanks for having me. Well, it gets harder to reach places, it seems, as airlines have drastically cut the numbers of destinations. Let's have a look at Berlin. Cities like Liverpool and Toulouse in France have recently been cut from the schedule. From Düsseldorf, destinations including Basel in Switzerland or Tokyo can no longer be reached. There have been cuts in Hamburg too, and in many other major cities that used to have their own hubs. The only exceptions, Frankfurt and Munich, are still adding destinations, but generally the number of destinations one can reach directly from German airports is in decline. This new study by an industry group actually has some numbers. In Stuttgart, home to automakers like Mercedes-Benz and Porsche, the number of destinations is down 20%. And Berlin dropped by 18%. So for those in need of travel, the options are fewer and fewer.
Now let's delve deeper into this. What are analysts saying about this trend?
Well, first of all, we should mention this is all about business travel. We are not talking about tourism here. In fact, flights to traditional tourist destinations haven't been cut at all. But looking specifically at business travel, there's a few factors at work. The pandemic a few years ago has made business travel almost obsolete, with most companies around the world switching from in-person meetings to video conferencing. Also, there is a general trend away from unnecessary short or middle distance flying. And that would, of course, be for environmental reasons. In this day and age, it should be clear to everyone that we have to lower our carbon footprint. And flying from A to B for a quick lunch meeting is not smart if there are other options like a video call or even train travel.
Now, what does this decline in business travel mean for Germany's economy?
Yeah, that's the big question, because we're looking at some destinations that have been cut now that at first glance might not even need to be served that much. Maybe because there aren't that many people flying there anyway. But for certain companies in those regions, having their flights cut translates into a real problem. Look at one example that the study highlights. There is that company ZF Friedrichshafen. It is an auto supplier, and they're located in the town of Friedrichshafen at Lake Constance on the German-Swiss border. It is beautiful there, but it's also a little off the beaten path. Now, Lufthansa is planning to cut a daily flight from Friedrichshafen Airport to Frankfurt. The problem, even though they're using that flight a lot less than they used to, sometimes management does need it, or customers might need it to check out products at ZF Friedrichshafen or meet with people there. Now, with those flights being gone, every trip now brings a detour through Munich or Stuttgart or some other nearby airport, and that costs many hours extra and essentially cuts into the attractiveness of any given place as a business or investment location. And it's something a company can't easily make up, especially since private jets have also become too much of a burden for many to deal with.
Lars, let's leave it there. Thanks for those insights. That was DW's Lars Halter joining us from Berlin.